Hi, everybody. Dennis Speigel here. Industry news is once again filled with announcements and rumors about the Six Flags organization. The buzz on the street is that Six Flags corporate is again laying off full-time staff in dizzying numbers. Comments on the social media blogs the last few days have been scathing, to say the least. There was an anonymous employee open letter that was recently posted to the Six Flags board of directors and investors asking that Salim Basul, the current president and CEO, be removed from his position. Now, most of you know in the industry that Mr. Basul took the Six Flags reins over in November of 2021, just 9 months ago. The press announcement at that time quoted Mr. Basul as saying the following: "I'm excited to bring the magic back to our parks. I will do my best to enable our people to fulfill their passion to make a difference and to harness their creativity to build on a shared vision for guest satisfaction and financial growth." He also said, "I'm passionate about empowering employees and serving our customers. And together with our team, I know we can set up Six Flags for a new level of success in the months and years ahead." Now, for the record, I have never met Mr. Basul. I do not know him personally. I have, however, known and watched the Six Flags organization struggle through several regimes of CEOs who have had basically little knowledge of what it takes to operate a major theme park organization. It appears today that that is exactly what is happening again at Six Flags, particularly after the second quarter announcement. It's a ship at sea without a captain, so to speak. So, what has happened since Mr. Basul took the top leadership role at Six Flags? Has the magic returned? Has he enabled staff to fulfill their passion and be creative? Has he empowered employees, and has Six Flags been set up for a new level of success? Well, with ongoing and massive staff changes at the park president level, including 5 that were just rumored to be fired or retired, along with an enormous number of mid-management positions eliminated, it appears that Mr. Basul has not come close to achieving what he announced he would accomplish upon his takeover of the company. Within about a month of assuming the helm, Basul made significant management changes, which immediately came under observation. At the crux of his decision was the desire for all park presidents and many others to report directly to him. Several senior VP positions were eliminated, including key people with deep industry experience, many of whom had been with the company in various positions for years. At the time of this pronouncements, I had hoped that this sweeping change in management style might be a positive new directional plan for the company. In early 22, Six Flags made more operating changes. It indicated it would be increasing admission pricing while eliminating heavy discounts on admissions in the future. It's an admirable plan. Mr. Basul said in an investor call that he wanted his parks to begin focusing on premium guests who are willing to pay more, rather than focusing on filling the parks to capacity with non-spending guests. Again, an admirable plan. While the price increases and reduced emphasis on discounting has been a common trend in the industry lately, Six Flags took it a bit further when it announced in February that it was ending its membership program and would be instituting a new 3-tier season pass structure. Prices overall for these passes were more expensive, offering smaller discounts and fewer benefits. By the month of May, the park had also discontinued their unlimited dining pass, something the pass holders were very upset about. Then, on top of this, Mr. Basul announced that the parks had abundant numbers of rides and attractions existing in the parks, and it was not going to be necessary to add new product every year. Quite a shocking statement, I believe. All of us who have tenure in the industry well know our success depends on repeat visitation, and repeat visitation is generated by CapEx and new product introduction. This was a statement I found very disconcerting to hear, and a neophyte statement to hear come from him. As the parks were continuing to make pricing increases and membership changes, it seemed that more and more guests were reporting their displeasure at the changes that were being made. Now, we all must remember the guests vote with their feet. In our industry, if we do not have top of the line activity, and I'm talking about turnstile spinning, there's no bottom of the line financially. Our business is about protecting our successful demographic attendance franchises, such as teen business, while growing our attendance in other demographic segments where we deem opportunity. Also, spending our CapEx dollars judiciously, where warranted and needed to make this growth occur. It appears that Mr. Basul has changed his position on some of these items from his earlier statement now that he realizes their importance and has seen the company's second quarter results in 2022. Late last week, we heard that Six Flags was again undergoing another sweeping round of staff layoffs. 5 park presidents, as I said, from Six Flags New England, Six Flags Great Adventure, Six Flags America, Six Flags St. Louis, and Six Flags Georgia, are all rumored to have already gone or announced their retirement. Also recently, the president of Six Flags Texas, you may remember, was fired over disagreements with Mr. Basul. And the president of Six Flags Great America, Chicago, recently passed away. This creates a loss of 7 park presidents within 8 months. Now, if all of these rumors are true, that's astounding. If you add to this, we are now hearing that this current round of rumored cuts also involves numerous department heads at parks throughout the Six Flags system. It would appear that this is a massive amount of knowledge, experience, and know-how to discard, particularly in one fell swoop. If all of this is true, what does it mean for Six Flags? Can it survive this extreme bloodletting and seemingly lack of understanding of the business? Will the board take some action? Is it necessary? Is it true? This morning, Thursday, August 11th, the Six Flags 2022 second quarter results were released. To say they were less than acceptable to the financial community and what the Six Flags CEO had expected is absolute. Attendance for Q2 2022 was 6.7 million, which was 1.8 million fewer people than the same period in 2021, or a 21% decline. Comparing 2022 results to 2019 showed 3.8 million fewer people, or a 36% decrease. Revenues fell in Q2 2022 to 435 million, a 25 million or 5.5% decrease from 2021, and a 42 million decrease from 2019 or 9%. Adjusted net EBITDA for Q2 2022 was 155 million, and this was $15 million less than 2021, a 9% decrease, and was 25 million less than 2019, a 14% decrease. At the time of this videotaping, the Six Flags stock prices had dropped below $20 or about 23%. I think at the close of day, they were up just a little. Now, the above information does not take into consideration the 2022 third quarter performance that we're currently experiencing in the industry. With the exception of several of the major destination parks, it appears regional parks have been experiencing declines in some of their park attendance since July 4th. Not all of their parks, but various parks throughout the United States. Our research tells us that attendance is softening. Per caps are still holding up, and that's great, but are down somewhat for some of the numbers that we've been seeing in the second quarter. Now, this should not come as a surprise to anyone. With inflation, high oil prices we've had, even though gasoline's coming down, higher interest rates, higher food prices, mortgage rates increasing, the political upheaval, this has to affect third quarter attendance and spending. So, what does this mean for Six Flags, which is our focus today? It does not bode well for their total 2022 year-end result. It does amplify the importance of Mr. Basul's comments this morning regarding the importance of their Oktoberfest, Fright Fest, and Holiday in the Park programs, which have been quite strong in the past and need to be equal or stronger in 2022. Six Flags celebrates 61 years of its existence this season and is iconic in many ways. After all, it was the second theme park organization to launch after the success of Disney in 1955, 61 years ago, as I said. It is obvious that great room for improvement still exists within the Six Flags organization on improving attendance, per capita, revenues, and their adjusted EBITDA. Change is good. I've always believed that. And I believe the industry is in support that Mr. Basul is successful in his quest to re-strategize and reinvigorate the company. However, to reach the board of directors' goal of a $700 million EBITDA in 2024, just in 2 years, a recipe utilizing a modicum of industry experience, knowledge, and understanding will be necessary for innovation of Six Flags, utilizing proven practices and creative new techniques. This will not be easy task, nor will it be done quickly. We wish the Six Flags organization success in their coming approach through their continued transition.